What's up, guys? Today's Sunday, and what I'd like to do a video on today is regarding gold and about the big event that is obviously happening this week that's going to probably affect gold price the most. Not just for the short term, but also for the kind of, the next few weeks, if not next 1 or 2 months, okay? This is obviously one of the most important events, the Fed meeting that's happening on between June 15th and June 16th, but June 16th is when all the important data and the press con of Powell happens. So want to discuss that because that's pretty much going to be driving the market this week. That's going to really be the key factor. And we'll discuss what that kind of means for price. Okay, so if you aren't aware, guys, there's going to be a Fed meeting on June 15th, June 16th. If we go to the economic calendar here. And what's really important to understand is a couple things. The first thing is that when these meetings happen, there's normally a bunch of different so-called news or data that comes out, right? So for example, in this particular time, there's 5 key events that we really want to be paying attention to. You have the meeting minutes that comes out. Okay, then you have the FOMC statement or the Fed statement, basically. Um, this time we also have the interest rate decision. So the last time we had that was on April 29th. We're going to have the interest rate decision here again. So this is the Fed will basically be announcing what is going to be the allowed interest rate in the economy. Okay, so as if you guys aren't aware, interest rates are at all-time lows in the United States, right? Which is why people like me are so bullish on gold. And it's been at 0.25% for quite some time now. And then this time we also have the FOMC economic projections. So this is actually, if we actually, let me actually click into it so you guys can see the exact description. This report includes the Federal Open Market Committee's projection for inflation and economic growth over for the next 2 years. So essentially, you get to see what they're also forecasting in terms of interest rates and growth over the coming years. Okay, so right now, based off previous iterations of this, okay, it seems as though the Fed is even expecting to keep interest rates this low until 2022. But now there's even talk of them pushing this back to 2023 because of the mixed economic growth data that's come out with like the high employment rate, the lower job numbers, and all those types of things, okay? The last event that you also need to pay attention for that isn't listed here, but has just as strong an effect on the market, potentially on the market, is Powell's press conference, which always happens about 30 minutes right after all of this data gets released. Okay, and here this is a chance for for the media to ask him questions, and as you know, as Powell is the chairman of the Fed, anything that he even hints at in terms of interest rates or whatever could have a large effect on the market, have a very strong an effect whether the dollar is going to be bullish or bearish, and consequently have an effect on gold price too. So this this particular day is going to be really, really important for us to follow, and we need to, if we're trying to trade gold, we need to like fully understand what the potential implications are. We don't want to try necessarily just make a prediction and then make a bet on the fact that it's going to go one way. It's better for us just to kind of have a better understanding of what could happen if this happens and what could happen if this happens and so forth. Okay, so um, let me just go through some of my notes here that I wanted to make sure that I actually discussed. Okay, so I think the two main things that you want to really also or the two main things that are going to be the highlight or the focus of all of this news and of the press conference is one, interest rates, and two, asset purchases or purchases, okay? The reason is because these are things which directly lead to um, a bullish or bearish dollar. Okay, right now the interest rates are very low, as I've explained in previous videos, because the Fed is essentially trying to encourage people not to park their money in the bank, okay, but to really spend their money. At the same time, take loans from banks, okay, to increase, to basically stimulate the economy. At the same time, convince corporations to also start taking loans, right? Money is cheap right now, so that they're trying to make money cheap. And by doing so, they're trying to encourage people to spend it. At the same time, the second key thing that we're trying to look out for in terms of how they're going to be changing their monetary policy is based on so-called asset purchases, okay? And what this basically means is that right now the Fed is buying at all-time high, like all-time amounts of government of things like bonds, etc. Okay, and what this basically does is when they do this, they're basically they're directly increasing the money supply. When you increase the money supply, it incentivizes banks to start lending out more of its money, right, at lower rates because there's more money supply, right? So that is why this is also consequently bullish or bearish for the dollar, right? If the Fed is buying all of these bonds and increasing the money supply like that, it's very bearish for the dollar. As soon as potentially, for example, let's say Powell then in this press conference were to mention something like, oh, we're actually the inflation numbers are a bit worrying. We're thinking about, you know, tapering asset purchases. This could even something like this could lead to people all of a sudden switching their stance and becoming more bullish on the dollar. Okay, just because it would mean that interest rates are going to increase because the money supply will be decreasing. Okay, so that's kind of like the economic theory behind that. So those are the two main things that we really want to be paying attention towards. Like, is the Fed? It's not really about is our interest rates going to increase with the interest rate decision. I think it's pretty clear at this point that the interest rates are going to stay the same. That's not the issue. And chances are that the amount of assets that they're still purchasing right now is not going to, drop overnight or decrease overnight. But what we're really looking for is kind of hints, right? Given the data that's come out recently with the really, really high inflation now that we've been seeing of about 5%, right? Which is definitely worrying, right? So typically when the inflation is this high, this is when they want to start increasing interest rates. But we have to see what the Fed is going to want to do, given the fact that still um, jobs data is low and all these types of things, okay? So that's really what we want to be paying attention for this particular week. Now, one thing that I would like to do as well, just to show you guys, is the last time we had an interest rate decision was back in April 29, on April 29th. And I just want to kind of show you what actually happened in terms of price action with gold on that day. Okay, so interest rates remain flat. And on that day, we go to April 29th. This is actually the 4-hour chart. So as you can see here, we actually got a huge decrease in the price of gold, right? There was crazy volatility, as what always happens when these kind of big Fed meetings happen and all those types of things, okay? We got a huge, up and down period during the release of this data, okay? If you look at the 15-minute chart, or let's say just even the hour chart, okay, now I have to go back there. If you even just look at the hour chart, you can see the kind of volatility that we experienced at that time. Look at this kind of crazy candles, right? So when you're looking at the very short term, sometimes it's very hard to see like, okay, is the market trying to go this way or that way? But if we then look at the longer term, from a longer term standpoint over the coming days and weeks, what did that day actually do for price? We ended up seeing obviously a huge uptrend in price for gold, okay? Because people were so bearish on the dollar, okay? What the Fed basically said during those times was that the inflation that we were experiencing was so-called transitory, meaning that it's only due to the fact that the economy is recovering from the pandemic, okay? Whether that's true or not, you know my stance, definitely not true, but the Fed is saying that, okay? So that therefore they're not going to be, increasing interest rates, blah, 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 blah. Consequently, the whole narrative that they released with that data and with Powell, and and the press conference led to this pretty strong bullish trend in gold, right? Like if you had decided to open a few positions on that day, okay, yes, on that particular day, your position could have been up and down, but over those coming weeks, you would have made a big return on gold, okay? Because the dollar was so bearish. Okay, so that's something that I want you guys to understand. This news is not just about that short-term volatility, but look over the coming days and weeks. What happened after that news came out, right? We basically saw a very, very strong uptrend, and it just signifies how important this is, and why we need to really understand and pay attention to it. Okay. Now, I think so if we consider that interest rates won't be raised, okay, and asset purchases won't be tapered like immediately, okay? So what are the key kind of narratives that we want to really look for, okay? The first thing is we want to see if the Fed is going to change their stance on the idea that the inflation that we saw from last week's numbers, right, that caused this crazy, crazy funky up and down thing, right? Because, I mean, more than anything, this here, I guess, has clearly shown that the market is extremely mixed with their opinions, right? And now we're really waiting to see what the Fed is thinking. So we need to see, does the Fed still believe that this inflation is transitory? Because if their stance changes on this, if they start saying, well, maybe this inflation is legit, it's real, this may kind of push them to actually start raising interest rates a lot sooner, okay? The other key thing we want to really be paying attention for is there any talk for them to start tapering or decreasing asset purchases, right? Because of the inflation numbers and those types of things. The last thing we also want to see in terms of like the narrative that could be coming out from all of this data and the press conference is if their opinion on the economy in terms of how it's recovering has changed, right? They've been saying for a while that the economy is not overheating. They insist that despite the stocks being at all-time highs and all of these types of things and the inflation and everything, right? They insist that it's not overheating and it still needs a lot of support from them in terms of monetary policy, right? To basically, continue its recovery, right? And you could argue that, yeah, that's probably true as well, right? With the jobs data that came out. We also have the retail data, which is going to come out the day before on Tuesday. So that's going to be really interesting to see if the data that comes out on Tuesday is going to kind of support the idea that the economic recovery is not nearly as good as the Fed was maybe hoping, okay? And if it's not, and if the Fed is saying, yeah, the economy is not recovering as well as it should be, this typically leads to kind of more fear and will lead to an increase in the price of gold, right? If this narrative starts getting pushed out. And more than anything, it will be bearish for the dollar, okay? So these are the three key narratives that we really need to be paying attention for um, on that particular day, okay? These are the three key things, okay? Interest rates, right? Is there going to be a change, right? Is there any potential that interest rates could be raised sooner rather than 2022? Will it maybe get pushed back? The idea of raising interest rates at all get pushed back by a year? All of these things are what we need to be paying attention for, right? Okay. So hopefully everything I'm saying is pretty clear. So the last thing then I would want to just talk about, okay, is what does this mean in terms of how we're going to actually trade the market for gold, okay? Because at the moment we're at a price range of about 1877. We're kind of stuck, right? More than anything, we're kind of stuck near between this, what was sometimes support, but we broke through it on Friday, right? At this 1880 level. So right now we're between this much stronger support of 1870 and then right now what's probably some sort of resistance at 1880. And then we got that next level support at 1850, which has proven to be very strong 2 times, right? So what are we really looking for here? Well, we really want to see that, okay, if the Fed is actually starts hinting a lot more at, raising interest rates and decreasing asset purchases, okay, which would then lead to um, a more bullish dollar and consequently bearish gold. this obviously probably for the next few days will lead to a decrease in the gold price, okay? But we'll have to then analyze, okay, is this really just a temporary kind of decrease, or are we still bullish on gold in the sense that the inflation is very real, and in reality, they're not going to raise interest rates anytime soon, okay? So we'll have to, in that particular scenario, I think what we'll want to see is to try and buy uh, into a gold position on a long position at certain support levels which are maybe much stronger than other ones, right? So what I mean is not not buying in at like 1875, but buying in maybe more 1850 or 1840 if we get that decline, okay? Um, on the other hand, if the narrative continues to be transitory inflation, okay, like this inflation isn't real, we still need to do more to help the economy recover, blah, 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 blah. We're not going to increase interest rates anytime soon. Or if anything, we're going to increase interest rates later than we expected, blah, 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 this type of thing. Then, and I'm not talking about that initial volatility, okay? But then over the coming days, I do expect for us to easily break through 1900, okay? I know we've been struggling really hard to do that, but that would be a very, very strong sign that there's going to be a lot of bearish sentiment on the dollar, okay? I know I've been very bearish on the dollar for some time, but that would really be like the nail in the coffin, I think, for a lot of people, that we're going lower with the dollar, okay? So I then do think that breaking past 1900 and actually staying above it is very, very, very realistic. So I'm just eyeing the two support levels of 1870 and 1855. For full transparency, I do actually have put a position open at this level so far, but not a big one, so something that could definitely handle that type of volatility, even down to 1840, no problem. I'd be risking not much in my account, okay? But I will definitely be trying to buy in slightly larger lot positions at like the 1870 or more like 1855 types of levels, just because I personally do expect that no matter what comes out, that it's still ultimately going to be bullish for gold. And these two particular levels, and I'm sure 1840 as well, are going to prove very, very strong support in my opinion. So that's why I'm looking out for those levels. But again, you need to follow the data. You need to see what Powell says. Ideally, you should even take a look at the reports, and you need to make your own decisions on this so you can determine if you're still as bullish on gold or as bearish on the dollar as I am. Okay? Anyways, guys, hope I covered that as well as possible. That's really the main thing I'm looking out for this week, apart from the retail sales on Tuesday, which could, maybe like just give a little foreshadowing of what's to come on Wednesday. But Wednesday is going to be a big day. Don't freak out if we get some crazy volatility, because I'm sure we will. Just think about it a lot more from like that, the position of the next few days to few weeks to potentially even the next few months, okay? Because this is definitely going to have a big impact on the market. All right. If you have any questions, you can leave comment, and I'll try and respond to them. Okay. If you want to troll, you can be a dickhead. That's fucking fine. And yeah, uh, if you like this content, I'm going to try and I'm trying to do gold content as much as possible. So if you like the gold content, consider giving this video a like and subscribing to this. I really want to try and hit 1,000 subs so I can finally invest in a better mic, because I won't do it until I hit 1,000. All right. Cheers, guys.